Hello and welcome to today's conclave on emerging risks and solutions for global corporations, which is organized by Indo-American Chamber of Commerce, the West India Council. I'm Nisha Podar from CNBC TV 18, and I have with me an eminent panel of guests who have their skin in the game when it comes to management of risks, as well as providing solutions and coverages. So let me welcome all the panelists here on the stage. Now, my first question definitely will be on the evolving landscape on the regulatory aspects and the changing dynamics in the business prospects. We are all getting into a global economic cycle. India is not immune to the global regulatory changes as well as the new mechanisms which are developing, and internet has a big role to play in that. How are we really coping with it, and what is the kind of solutions as well as the coverage that we have in India, and are we future ready? So that's the big question, ladies and gentlemen. Let me first address the question to a big corporate here on the panel. Saurav comes from Reliance Industries, a large conglomerate. Now, talking about risk management, how big and critical a role has this particular area and the vertical of business has really taken, Saurav, and where is it headed?
I think it's a very large question that needs to be addressed, especially after, not after or before. It's basically we get obviously governed by the Companies Act and the obligations under the Act. But I mean, keeping the act aside, I think for any large organization or any large corporate, I think risk management, developing the risk management philosophy, creating the right lines of defenses is very, very important. Because for any business now, since you work across boundaries, you need to be aware of the local regulations, not only in India, but across India. So it's important to identify, quantify, and address the risk issues. Now, and when we say addressing the risk issues, it's not only just buying insurances, and how do you transfer the risk without insurance also. So it's completely, developing your own risk management philosophy, writing a, complete book on how much risk you want to retain, how much you need to transfer, and, getting right up to the senior most management within the organizations, because Company Act do ask you to, put a right framework, monitor it, and then also closely implement and ensure that, because at the end of the day, you have to protect the shareholders' value. I mean, that's what I like to, start up with.
All right, so protecting the shareholders' value. Now, let me come to Ketan Dalal then. Ketan, you've seen the regulatory aspects for many years. Of course, Companies Act 2013 has brought about a huge change, and also the corporate governance standards that now we are getting acclimatized to in India as well. So when we talk about the various regulatory changes and how the landscape has really evolved, what are your views on how fast changing is this particular area?
Nisha, as Saurabh mentioned in a different context, this is also a very broad question, but let me just step back and look at what has happened in India in the last, let's say, 10 or 12 years. So I divide these changes into 4 baskets. One is regulations themselves. So you spoke about Companies Act, SEBI. So that's one set of regulations. FDI, you saw FDI in e-commerce regulations suddenly changing. The second basket is tax. So endless number of changes in income tax. And then, of course, you have had the big daddy of them all, GST. The third is sector regulations. So we are sitting in a place where there are lots of insurance people. So say IRDA regulations. You have a completely new sector regulation like, say, RERA. And the fourth is Indian accounting, the Ind AS, the accounting standards. And from experience, I can tell you that corporates have been totally snowed under. It's becoming impossible to deal with so many regulations. I was just talking to you before, talking to all of you before this panel, that SEBI regulations, every third day something is changing. So we're listing obligations and disclosure requirements. So I think to cut this short and get to the point, I think the huge number of regulations, and it's becoming extremely difficult, and that brings with it its own set of risks, because you may not understand or even if you understand, you don't even know how to comply, or may not even have the people to comply with it.
Right. So many changes, and Tanaya will throw more light on that from the welfare of the employee perspective and how new things have emerged, like sexual harassment, which was not there when I joined an office 15 years back. So how have these things really evolved, and how are corporates being able to adapt to these changes?
First of all, POSH, as we call it, prevention of sexual harassment, is something which really happened as per the Vishaka guidelines. For those of you who are probably new to the story, it was about an NGO worker called Bhamri Devi versus the state of Rajasthan, and the Vishaka guidelines actually came in. And what happened is some corporates started their movement, but unfortunately what happened is the government of India didn't really react. And then in the background was the Nirbhaya case which happened, and that's when everything, really went, everything started churning, and there were lots of regulations. But having said that, there is technology also behind POSH, and a lot of companies are using data analytics and artificial intelligence to come about with a predictive index or predictive analysis of how every facility, how every the layers, where is this going to be? So there is that kind of predictability is also being built into the system through predictive analysis, data analytics, and artificial intelligence.
All right. So these are systems in place to prevent these risks from coming up. We'll talk more about the systems and to sense it, to act on it, to react on it. But first to the prevention. And Sanjay comes in on that one from ICICI Lombard. So Sanjay, it's a big business opportunity as well, do you think, for the insurance companies? And we've been talking about insurance penetration in the country for a decade and a half. Is this for real now with the kind of risks that are emerging?
Absolutely. So our business is, risk. So it's always a business opportunity. So the issue, I think, a lot of highlight, in terms of the complexity of risks which are coming in, and, how do corporates tackle that, even at the employee level and, stuff like that. But, I always maintain the business of businesses to take risk. Correct. And if the business of business to take risk, where do we stand? So then we, corporates alone can't really tackle it, because sometimes they are isolated at times. So you need, people, an ecosystem of people who, deal with risk. Advisors like brokers, who understand risk and keep giving advice, unbiased advice. Then you need people who need to transfer the risk. Some risk you retain, some risk you transfer. And when you transfer the risk, the mechanism is global. That's what I'm proud about the insurance industry is it's a global transfer of risk.
Yes.
The word global is also important there. But the point is that you need to transfer risk to be able to tackle situations which are extreme in nature. Extreme could be catastrophes. It could be something which in terms of emerging risks like cyber. But you don't know. It's unknown. It's a VUCA world, so you need to really prepare for it. Having said all of that, I think the whole debate should be about identifying risks, being able to work, as you said, being able to prevent and mitigate some of it, and the rest which you can't prevent, which is something which is like an earthquake or something. Then you need to transfer it to be able to make sure that the company or the person survives, risk. For companies, it's always balance sheet risk. They can't go down under. For individuals, anything is a catastrophe, whether it's a harassment issue or a big, sickness issue, is a thing. And you need to have mechanisms to be able to, take care not only on the preventive side, but even when something happens, then you should be on a long-term basis be able to take care of it. Because we live long and we face these issues over a long period. It's not about here and now.
So the larger question here, definitely, that we are discussing, first of all, is that the mindset of having a coverage for protection, is that there in India? Is it still prevalent? Is it enough or not as yet? And that's something that we have been debating for a decade and a half, is what how I understand this. But Tanaya, coming from the HR perspective, is that now well understood in terms of the costs and the resources which need to be deployed? And are the corporates more agile towards that and more open towards that?
Again, if I go to the POSH guidelines, companies are ensuring that, see, because it mandates that, you have, it's a quasi-judicial framework where you have 4 people who are supposed to be there, 50% being women, and 1 obviously being an NGO or a lawyer, and that's mandated. But it is becoming extremely expensive at this point in time for companies, because if you look at the state of Bengaluru, where there was a particular case where the employee filed against the judgment that was taken by the POSH committee, and the company was liable to pay. Right. So this is something which is it's a constant change. And the good news is that my counterparts have just told me that there is an insurance cover for this, and this is the directors and officers liability insurance and the employment practice liability insurance.
Yes. So there are new products that are also evolving. But let me throw this question to Ketan. When it comes to, say, mergers and acquisitions, the key man insurance and the key man protection, how important is that? Has the due diligence stage also reached there? And I have a very live example in front of us right now in the large Walmart Flipkart deal, where there was a Me Too kind of an issue, because of which there is a huge uncertainty and therefore a loss. So have we now acclimatized ourselves to the due diligence of even the personnel and therefore the protection?
In the context of M&A transactions, usually it has not filtered down to that level yet. Usually the due diligence, and even that is sometimes lacking because of the pressures of time, is in 3 broad baskets. One is the commercial DD. Does this deal make sense in the first place? Will the cultures match? Are the 2 companies synergistic, etc., etc. The second is the legal due diligence, land titles, assets existence, and so on and so forth. Of course, valuation will always be there, but I'm not counting that as a part of due diligence. And the third, which most people think is the only due diligence, is really the financial due diligence, unknown liabilities, this, etc. Now, if you see all these 3, they normally till now have not filtered down to those softer issues that much. But as you said, with the kind of example that you gave, I think that issue is also coming to the fore, because the risk here is a management disruption and significant reputational risk, which can take months and months and months to sort of unwind, if you see what I mean.
What we are discussing here is the whole disruptive world today of internet, digital space, data, in which cybersecurity is also taking up a huge amount of prominence. Today we will understand the entire landscape, which for a lot of us is a very new subject. The new names like Internet of Things, artificial intelligence, and various other things are new animals which have made their way into the new form dictionary. We are going to understand in this changing world, how are we coping with the risks and also putting in systems so that we avert any risks going forward. So let me welcome the entire panel for that. And my first question would be to Burgess. Now, help us understand, how do you first ascertain, sense the system, and therefore take it forward from there, as the companies are now getting ready or future ready for any sort of cyber risks that may come upon them?
Thanks, Nisha, for a great opening question. Let me start by answering you in 2 ways. The first part is the trends which have caused this, and the second part being the compliances which necessitate that. In trends, and you mentioned the word landscape, as companies go more digital, as companies adopt more IoT, Internet of Things, as the threat landscape increases, the digital boundary of a company is not just restricted to a small place. It's actually across many, many continents. As the boundary expands, so do the landscape, so does the footprint, and also the vulnerabilities. And only it takes a hacker one vulnerability to expose, enter a company, and can cause a huge cyber breach, which will be disastrous for the company. Let's talk on some of the trends. Earlier, the attacks of cyber were mainly happening on banks and telecom companies. That's where the money was. But today, manufacturing, healthcare is the new sweet spot for hackers. Because these companies did not put the best defenses as a bank would. They thought, I'm boring, who will hack a bold cement plant or a steel plant or a small medical shop. But the amount of damage a hacker can cause on a steel plant, it can cause a health and safety issue, medical records can be breached, is far more than a data breach. The second trend is today you are attacked not only for who you are, but who you can give access to. A biggest credit card retailer in the US, Target, was breached by a small AC HVAC company who was monitoring their temperature. So you could be a conduit to a larger attack. So these trends have accentuated the need for a cyber sort of compliance, which is also further the regulation parts take place. GDPR, the earlier panelists mentioned that. 20 million euros or 2 to 4% of your gross annual revenue as potential penalties. Followed by the last Indian Regulation Act, potential coming through, 15 crores to over 10 crores with criminal penalties potentially for directors. So both these new trends in the industry and the increased need for compliances have accentuated this cyber insurance need.
All right. So Burgess, thanks so much for setting the stage so well and making us understand what we are in for. But before we get into the whole binding discussion on the various technicalities of it, first let's understand how cyber law in the country has really evolved. And we have a specialist here. Ms. Nabinal will tell us more about how cyber law has evolved and where we stand today in India.
It has been rather glacial, So we have here a situation where technology grows exponentially, and we are always doing a catch-up game. Well, that's not anything new. That's the way law always is. It would do a catch-up game. But where the problem arises is because of the speed. I call it the warp speed, typical Star Wars fan style. So when technology is evolving at warp speed, and more importantly, when criminals are evolving at a super pace speed, they are so innovative and ingenious in what they can or actually do. And if law is still keeping to its traditional pace, then it doesn't work. Where do we stand in general? I'm just sticking to India now because otherwise I can take the rest of the day for the whole, for giving even a brief input on the whole world. But India started its saga in 2000, and from 2000 to 2008, I can tell you as one of the earliest practitioners in this field that not many people even would pay attention when we talked about cyber threats. And very interestingly, today we were talking about, and even in the earlier session, people were talking about data as an asset. And we are talking about infrastructure as an asset, right? Cyber as an asset. That concept itself was missing from people's psyche. So you had the laws, which were just about 10 provisions, which really mattered except for e-commerce. Everything else was about e-commerce in the IT Act. And then suddenly they woke up to a lot of threats and vulnerabilities, and many provisions were introduced to make hacking, virus attacks, data theft, etc. an offense. In 2008, it became effective only in 2009. And then you also had some data protection provisions introduced under 43, 43A, and 72A, which again dealt with what happens to personal data, right, or sensitive personal data and its breach. Yes. So two things that came out of it were also rules for reasonable best practices and intermediary guidelines on how do you deal with third-party data, how do you deal with third-party content on your platform, and what are the protective measures that you needed to take.
So Manoj, you are in this business and you have an interface with the corporates. We know that the largest banks are also valued a lot more now just because they have a treasure of data. So that's really considered an asset. But how many really understand the liability aspect of it?
Yeah. So, Burgess, thanks a lot because you have already established the need of cyber insurance. Let me take it from there. Ma'am has already explained that, look, 2008 was the change as far as the introduction of Section 43A, which is widely known as the, the cyber liability section under IT Act 2008. But in 2011, there are some rules for the reasonable standards, which also was released. And even in 2014, when this insurance was launched in Indian market, many of the companies were not aware of that, look, if there is a breach, how they will demonstrate that, look, they have complied with the Section 43A. Simple thing is, even the banks were not complied with ISO 27001 in 2014. That was the scenario. Now, if you ask me today, that look, almost all the companies are aware of this exposure. How they are aware of the exposure? 2014, we started through the contracts. The IT companies came to know about this exposure because their US clients and European clients put this as a clause into their contract that, look, if there is any breach, which the indemnification is that, look, any consequential loss on us from various statutes and other customer damages from our territory. So IT companies went to the market, they mitigated it through insurance policies. Then came the banks. Banks, the first set of banks which were the US listed banks. Why US listed banks? In 2015, SEC made a very clear circular. 2013 there was a circular. 2015 it was made it very clear to the US listed companies that, look, it is an event exposure. Whenever there is a cyber breach, which you have to notify, clearly stating that, look, what is the consequence of this breach and what are the measures which you have taken. Then came the Indian PSU banks and all financial institutions. Then the healthcare companies, telecommunication companies. Because if you look into it, any company which is connected to the net today, whether they handle sensitive information or not, either there is a direct liability or there is a conduit liability, which Burgess has already explained to you. Let me explain to you, there are three issues directly coming from the cyber liability exposure for any company. One is a direct financial loss. Second one is the indirect financial loss in the form of liability. The third one is regulatory actions and fines and penalties. And under the GDPR, it varies from 10 million euro to 20 million euro, subject to 2 to 4%, whichever is higher. In Indian data privacy bill, similar provisions, 2 to 4, 10 to 25 crore, whichever is higher. So across the globe, fines and penalties which are civil in nature, which is increasing, regulatory actions will increase. So all the companies are aware of these exposures, and this is one of the fastest growing insurance products across the globe. So is the case in India.
Yeah, so internet companies are not the only ones which are really affected by cyber attacks. This is well established now. But Priyanka, help us understand, have there been any triggers, any events that have really brought about this awareness in India? Because we haven't yet seen any big case or any big payout in India, though we have got many examples overseas.
Yeah, so Nisha, like Manoj already said, this insurance policy has been in place from 2014. But really, if you ask us as insurers, the need and the requirement for buying this insurance and the awareness is really coming in now. It's about a year and a half back where people have really got to know that there is a protection or there's a policy that gives you coverage for cyber insurance. The need really came in from contractual requirement. A lot of liability policies in India really are bought by companies because of contractual requirements that come in from international clients of theirs to buy insurance. Now the change is coming in with awareness of regulatory changes that have come in. We've had some incidences in India, so a lot of times when you talk to clients, they want to know whether this can happen to us in India as well. And I think we've had some banks that have faced some cyber attacks. You've had Indian companies that have come into this purview of cyber. And I think that's when the awareness has come in, and that it can happen to us in India as well.
We have got enough understanding on prevention and protection, and more awareness is what we are seeing amongst corporates as with each passing day. With that, I thank you all for joining us here.